Well, guys, welcome back for another episode here of Let It Grow Investing. I'm Jeff. We're going to try to get everything covered as far as what's going on with US Iran. We're going to try to figure out what's going on with the market, how bad tech is, where to invest now, what's going to happen to oil. We're going to try to cover it all. So thank you very much for being here. First up, man, woke up to news of U.S. bombing Iran on Saturday. We, got a lot of different things going on with that. I'm going to try to focus on the market side, not just specifically the geopolitical tensions, although they are going to be intertwined, right? I can't say that I know exactly what's going on over there. I've read the headlines, I've seen some of the news, but I can't say that I'm so well versed in, the geopolitical side of what's going on in the Middle East. So first thoughts, I'm going to be looking at what the market we're expecting it to do when future markets open tonight. I think that's about 6 p.m. Eastern Standard Time. Well, we are expecting oil prices to go up. So if you haven't filled up your gas tank, if you need to fill up your gas tank, a lot of people are saying do it Sunday before the market opens Monday because of the fact that so much oil goes through the Strait of Hormuz, which I'm probably saying wrong. It's about 20% of the world's capacity, or maybe I think it was 20%. And about 100 million barrels a day, if I have those numbers correct. So if this is a long, prolonged conflict with Iran, what's going to happen at that strait? How much oil is going to be restricted? Who's going to need it? How much are we going to have to supply? And where else can they get it from? What that's going to mean for, geopolitical tensions with Russia, with China, with whoever else might need that oil and where they're getting it from. There's just a lot of tension right there. So what does that mean for the rest of the market, right? Well, I'm thinking, your defense contractors are probably going to go up, right? We're using a lot of military ordnance. We're using a lot of personnel. I think that those companies, the ones that are selling the missiles, the ICBMs, whatever we are using to attack Iran, anything drone related, anything defense related, I think is going to go up early this week, right? We were counting on some of this. So we're some kind of poking the bear for the last couple of weeks. This isn't, a brand new problem. This was some rising tensions, and a lot of the market was kind of anticipating that something would happen. So some people are thinking that the whole market could actually rally higher because now we know we've got some information, right? We know what happened. We kind of see the outcome. We aren't necessarily thinking this is going to be a forever problem as of right now. That could be wrong. But a lot of people were leaning to the fact that the news was already out there. We already knew that rising tensions were going to happen. We already knew that, some of this was going to happen. But now we are actually going to react to the fact that, Strait of Hormuz can be slowed or shut down. And so we're thinking maybe we're going to have a surging in prices in oil and defense spending. And then a lot of the other parts of the market are just going to kind of gradually go up because some of this tension is kind of released, right? We already know what happened. This is maybe a blip on the radar. Maybe it ends here and maybe we can move forward, right? So we did get some interest rates coming down on the 30-year. It is now below 6%. That is the first time since 2022. So borrowing got a little bit cheaper. We're seeing that kind of ripple effect through the economy. We are seeing more people leaving the S&P 500 and moving into international stocks, right? So VXUS would be the Vanguard Total Market Index, right? So you're getting not just US-based stocks, but you're getting some exposure to Europe and Asia and Africa and other emerging markets. So a lot of people are playing it that way. And some people are saying because of the fact that earnings in America has slowed. I mean, yes, maybe so, but I don't necessarily see running for the hills at this point. Does it make sense to have exposure elsewhere? Yeah, for certain. Broaden that basket of what you have. Don't just count on one company, one industry, one continent. Definitely have some exposure elsewhere. Have the exposure in gold and silver. So when that goes up, you're in that place when it happens, right? There's limited downside on buying gold and silver a year ago. A lot of those prices were already baked in. They were, very stable, but then we get this massive run up and you wish you were there. So if you're already there, you don't have to chase, and chasing leads to problems. Don't chase the stocks after they already run. That would be like buying AMD at 250 or Palantir at 200, and then it comes kind of crumbling back down, easing back down. It's all about perspective, right? If you bought AMD at 8, or if you bought Palantir at 15, like some of us did, you're safe, you're happy, you got a 10x play or whatever you got on whatever your entry point is. But if you bought it at 200, you're thinking, man, stock market's a scam, I don't want to be involved, I'd rather sell it and put the money under the mattress or whatever. And that is not what we try to teach around here. We try to look at dollar cost averaging, building a position when other people aren't buying it, right? We're trying to buy things when people aren't, and we're trying to plan ahead rather than chasing the stocks. And if you do want to get involved, maybe you dollar cost average. So when you're buying Nvidia at 220, and now it's back into the 180s after earnings, and earnings look pretty good, now you can buy a little bit more at 180. And if it goes down to 150, we're buying a little bit more at 150, right? That way, we're not just putting all our eggs in the basket at one point in time. We're buying eggs all year long, right? I love just kind of stacking that portfolio, letting it grow, and that's why we're here, right? We're not just simply betting it all. This is not gambling. This is, tried and true dollar cost averaging, building a portfolio that makes sense for you and for your needs, right? And that is always a question, like, where should I be at whatever given age, right? You are where you are. Obviously, we want to have more saved for retirement. You got to figure out your own fire number. When can I just hurry up and retire? That is all on you. If you got 100 grand saved, or if you got 10 million saved, you've got to figure out what kind of lifestyle you want to have, where you want to be to enter retirement. And if you think you're behind, you got to figure out a way to catch up. So that is a good bit of what we do around here. This is not just chasing the market. I'm not going to tell you to go all in on one thing ever. I would never say that. I'm not an advisor, but I would not tell you to go all in on any one thing at any given point in time, because that is a good way to get yourself in a situation that you don't want to be in, where things can go poorly for you really quickly. So let's get back over and take a look at just what is going on with Nvidia. I did want to give this one a little bit of time, right? Let's go ahead and share just what we've got on my E-Trade here. Let's go and share E-Trade, bring this one up, right? We're looking at Nvidia at 177. If we are looking at the 5-day, we can see that this had a massive sell-off on the 25th to the 26th, right? This is after earnings, and earnings didn't look that bad. They had they said they tripled in revenues. Let me pull up some other news here. So I'm not just throwing out numbers. Let's actually get to what we want to see here. So we will get to Netflix. I did want to cover that one. Let's get to Nvidia. They are 90% of the revenue in 2025 came from data centers. 69% of Nvidia's revenue in 2025 came from the US. So again, this is going to be one that's very US focused, very individual industry focused at this point in time, right? Let's go down one more. There we go. We've got, they just said that it has increased its business by 13x since the launch of ChatGPT, right? So a lot of people leaning into AI. We're seeing Amazon looking to build their own AI chips. They're trying to get away from NVIDIA. We've also seen Meta going with AMD. So that could all be different reasons that NVIDIA has gone down this week. The dividend, nothing to write home about. We see that it is only a penny, but that does mean that Jensen Huang just got $8.3 million in dividend checks from his 830 million shares, right? So yes, it's not a lot, but if you start amassing enough, I guess you're good to go. I will not get there, but other stocks are going to pay me more in dividends. They have increased their data center business by 10x over the last 3 years. This is still slated to keep on growing, right? We've seen that. They also said that one of the limiting factors is the amount of power that we can get. So if you're looking to build an AI portfolio, you do need to focus on some power or energy companies, right? That is definitely something that we are concerned about. EPS in the quarter of $1.62, beating expectations of $1.50. Revenue of $68.1 billion, beating expectations of $65.9 billion. So double beat, right? They had $43 billion of profit, I believe, in the quarter, right? Just profit. Someone might have to fact check me on that. It was, I believe, 41 or 43, but I'm not looking at that exact number at the moment. Just brought in $215.9 billion of revenue in 2025. Up from $27 billion in 22, right? $15 billion in revenue in 25 compared to $27 billion in 22, and the stock goes down, right? So there's sometimes it makes sense, other times it doesn't. And like I said, yes, there's other deals that are going on. Yes, people are rotating out of tech. AMD is trying to get in on some of this. Amazon's trying to make their own chips for their own, AI mission. And there's a lot of things going on, but long term, I am still very bullish on Nvidia. And I did go ahead and buy some, right? Nvidia being down 4% on Friday alone, and what about 20 points since the 25th. That is going to be an over sold situation for me. I think it went down too fast, too quickly, and I'm going to be there to pick up some of these shares on the cheap. They are also saying that physical AI is here, right? This could be a next growth lever for Nvidia. Physical AI having already contributed north of $6 billion in revenue in fiscal year 2026. Robotaxi rides are growing exponentially with commercial fleets from Tesla, Waymo, and Uber. Nvidia just said our largest customers to accelerate their capital spending. Claude Code, Claude Cowork, OpenAI, Codex have achieved useful intelligence. Adoption is skyrocketing and tokens are profitable, driving extreme urgency to scale up compute. Compute directly translates to intelligence and revenue growth for Nvidia, right? So another lever of growth for them. Jensen Huang also said everybody is power limited, right? So if you're looking to build an AI company, if you're looking to build an AI portfolio, what do you need, right? What do you want to be in? Well, Nvidia, AMD, you got the players like Tesla, Google, Amazon, you got Taiwan Semi, you've got Micron, but then what are we looking at when it comes to power? Well, one of them that is commonly talked about as the king of nuclear is going to be Constellation, right? And this stock has been doing really, really well. If we look at it on a 5-year, we'll see that it was down here in the $74 range in 22, 66 in 22. We were down into the 40s in 22, right? And now we're sitting at 330 from just, another energy company, right? But the demand is there. I've been more leaning into next era energy for a lot of the renewables and the utility, and the fact that the compound average growth rate has been mid double digits for about 5 or 10 years now. They are continually growing. Do I think that having one is better than the other? Sometimes, right? Sometimes they are. Having an Apple at times is great. Having the Nvidia at times is great. Having both of them works, but if you don't have room in your portfolio, you kind of got to make a pick and kind of roll with it, right? So I'm looking at next era. If I'm looking at this one, we've got a 5-year that does not look as good. So we're at a $74 price point in 21. We did get down to $50, and now we're sitting at 93. I think I was starting to buy in this time frame of around 2024, right? So I'm doing okay on this position. Constellation Energy could have been a better pick if I would have got in earlier, but when I was looking to build this one, this probably made more sense. So that's what I picked when I started, and maybe I missed an opportunity, right? I was looking at Goldman Sachs the other day, ticker GS, and I was kicking myself that I don't own any. I told you guys that this was going to go up with a lot of the mergers and acquisitions that were going on out there. See, I looked at this Thursday and it was 9 something, right? It was 984 on January 16th. But if you look at this over 5 years, man, you're just going to be like, man, I wish I was in Goldman. You're looking at a stock that was 339 down to a low of maybe 301. And I compared that to my JP Morgan position, which I think JP Morgan is a top tier bank, and Goldman more leans into the investment side, mergers and acquisitions and hedge funds and things. I mean, not that JP Morgan doesn't, but they have a little bit different of a valuation, right? So if I'm looking at JP Morgan, yeah, they've done well, but they haven't done quite as well. We've maybe had a double in that 5-year time frame, maybe a little bit more if we look into the September of 22. But man, Goldman looks great. So you got to make a pick, right? Either way, I did okay. Could I have done a little bit better? Maybe. If I was just simply in an index fund, could I have done better? Possibly. But I look at my performance overall. I'm outperforming the Dow, the Nasdaq, and the S&P with the stocks that I've picked. So Again, could I just tuck it away in an ETF? Sure. Could I simply just buy VXUS and let it ride and know that everything is invested into everything? Yeah, I could have. But I haven't done that, right? I haven't simply just put all my money into an ETF. Could I have simply just bought VXUS? Yeah, I could have. Could I have bought QQQ? Yes, I could have. But that limits some of the safety from having some Dow stocks or some dividend stocks. So I didn't do that. I'm not advocating you go any which way or the other, but you got to make a choice for what is best for you. So if you're new, maybe sometimes it's a little bit more enjoyable to have some stocks that you're really closely tied to, ones that you understand really well, rather than just I'm putting money in, it's just doing what it does. And I don't really pay attention to it. Some people like to pay attention. I do. I like to know what my companies are doing. I like to see what the deliveries are or how many miles of airline is traveling. I like to see how many seats they've got filled. I like to know how many people are traveling to a resort or whatever else. So that is just me. I don't think that that's going to change for me. So I invest in a bunch of different stocks. But now, if you're looking to simply get into something that, I can just put my money in and just kind of let it go and let it grow, if that's what you want to do, feel free, right? So I'm looking here at something like a VXUS. They change this around a bit, but this is going to be our growth of 10K over 10 years. So we are looking at, what is the purple here? I'm guessing purple is going to be VXUS. What is foreign large blend? Yeah, VXUS. So 10 grand over 10 years went from 10 to 26. Now, if we compare that to QQQ, let's just say, hey, what's the Nasdaq doing? What do we see that 10 grand growing to in the Nasdaq? It would have gone up to 65,259 if you put 10 grand into QQQ 10 years ago. Now, is that going to repeat itself? People often think that, if I just keep doing what's been working, I'm going to be fine. And sometimes that's the case, right? But right now, we have seen the QQQ get pulled back. February was a tough month for tech stocks. I was talking last time how Microsoft had gone down 17% since January 1st. Now, does that mean that we should get out of QQQ? No. Sometimes I think that's the best time to buy when everyone else wants out of it. I can rotate some money in while everyone else is running for the hills. While they're trying to get international stocks, I want to get Microsoft on the cheap because that's the kind of investor I am. I like a deal on quality companies. I don't really know anyone that doesn't, but a lot of people just get scared and run for the hills. So if we look at just the S&P, right? If we just look at the S&P 500, how has that performed over 10 years? Well, not as good as QQQ, right? So we're looking at 10 grand back here, would have grown to 42,181 if it was just invested in the S&P. So total, stock market return was about 26 from 10,000 to 26,000. QQQ was up to 61,000. I forget what that number already was. And the S&P is at 42,000. So you get a 2.5 times, a 6 times, and a 4.2 times return, depending on what you were investing in. Now, if you were in a Palantir or something like that, are you going to outpace those? Yes, but you're going to have some losers as well, right? So if you are just able to pick 5 stocks that win and they do 20x, man, send me those stocks. Just send them on over. I'll just buy them right along with you. But I don't think any of us are that good to only pick the stocks that are going to 20x. So you really got to either diversify by having multiple names, and you also don't want to have too heavy of an allocation to any one stock, right? We talk about if you have 20 names, that's 5% per name per position in your portfolio, right? So if you've got Microsoft, Tesla, Alphabet, Amazon, and say 16 others, right? You don't want to have any more than 5% in a given position. Sometimes you do, sometimes they grow, and then that allocation is a little bit heavy. At that point, you can make that tough decision. Do I want to sell out of some of it, or do I want to let it ride? So for me, I try to start at no more than that 5% allocation. And if it does get a little too big and the numbers don't work, right, that is really a tough thing. So I had to make that decision earlier this week. I wanted to get into some other names. So I sold out of some Apple. I sold some Apple, guys, probably about 6,000 or 7,000. But there's a lot of reasons that I sold some Apple stock, and let's take a peek why. Well, there's definitely some reasons here as to why I don't want to carry too much in the way of Apple. They are getting pricey when I'm looking at a forward PE, right? We're looking at a 31.7. I don't really care for that. The dividend is the dividend. I don't buy Apple for a dividend. I've been holding it for a long time. And I've told you I've made mistakes with Apple before, specifically when I was very early on. This is probably about 12 years ago at this point. So I had sold some Apple because it had gone under. It finally came back up to my cost basis. And I said, you know what? Apple is just a crowded trade. Everyone's just all these Apple fanboys about I've got an iPhone. And that just seemed to be all the rage, right? Now I'm really curious about what they do going forward. So there's about 6% of upside, yada, yada, yada. See, and this is where I get in the weeds with this. I think some of this money was better allocated elsewhere. So that's what I did. Annual revenue, yeah, we're going up 11% for 26, 19% by the end of 27. We're looking at dividend growth, 4%. Okay. Dividend payout ratio, awesome at 13%. That's fantastic. That means that they can raise this dividend if they wanted to, pay us more for holding the shares. 8.9 times the dividend coverage, right? They can cover this dividend with absolutely no problem. We've got a forward PE that's at a premium. We've got a trailing PE that's at a premium. We've got a price to sales at a premium, right? So a lot of this tells me that we're a little bit overvalued at this point, right? I think we're paying a little bit more on price to sales than what we typically do because a lot of people are running for the hills on some other names and they try to rotate to Apple for safety, security while still being tech. And at some point, I don't know when this starts to correct as well. So if they're not growing as quickly and it's already pricey, at some point this has got to turn back around. So if people start rotating back to tech, maybe we don't see as much buying in Apple, right? I don't think that we're going to keep pushing this price to sales so high, right? We peaked out here at around 10 and we're sitting at a 9.1. Somewhere in this 7.5 range is great. If I can buy it down here at 5, that's where I want to buy it. I don't want to be buying it when it's overvalued. And that's what the charts are showing us right now. Forward PEG ratio, we're about spot on with that 5-year average, right? We're looking at a 2.5. 5-year average is a 2.6, and that is more expensive than the S&P 500 at a 1.8. So price to sales high, PE metrics are high, forward PEG ratios in line, but I don't know that it's enough to really be a spot where I want to add a ton of Apple right now. So for me, is it necessarily a sell? No, it's probably a hold, truthfully. But the problem for me is that I saw other stocks that were better positioned for growth, right? So whether that be Nvidia, whether that be Meta or Amazon, which I was buying this week, I'm actually just going to show you guys what I was buying. It's just easier sometimes. Trading. Let me get over here and see what. Let's see our orders from this week. And I did buy some Zscaler and it has gone down. I'm aware. We did have a UPS covered call execute, right? So I've got about 11,500 to invest somewhere else. Nike did not hit 66, so I kept those shares. I'm probably going to rewrite this covered call. Bought some ZS. It went down. I bought more. I'll probably buy some more on Monday, right? And a lot of this reason is for the fact that with AI, we need a lot of cybersecurity. And again, this is one that had gone down. I didn't really want to buy CrowdStrike when it's at this peak. So I was trying to buy a stock that I think had more upside. I did buy some Broadcom, bought some Microsoft, some Salesforce, SoFi, Tesla, Nvidia, some more Bitcoin. That's the 2x leverage play. Amazon, Google, sold my Blackstone position because I didn't see that going up as well either. So these are all my buys. You guys can see it. Salesforce, Nvidia, CRM, Palantir, Tesla, Google. I've been loading the boat on some of these names. Not loading the boat. I've been buying. I've been nibbling, right? I'm not, 10, 15, 20 grand. This is, Google's at, what's Google at? 5. I can't even see my screen here. 11. So yeah, I bought some, right? I'm nibbling here and there. If I can buy a little bit more, I do. So that's what I'm looking to get into. So nothing is too heavy on dividends. Broadcom's probably less than a percentage point right now, maybe 1.5%. BITX pays a lot, but that's volatile. That's crazy. That's just a crazy name to be in. So some of these, I'm just buying the tech that's on sale. That's kind of where I'm at. That's kind of what I'm looking at. UPS is doing what UPS does, proving me wrong, and that's fine. That's fine. And like I said, the service from them had gone off a cliff in the past month with snow here, and the stock goes up. So yeah, I sold it for 115. It's at 115.86. I might even say, hey, look, if it goes to 114, I buy some back, right? We're still getting about 5.5% on a dividend yield. They just went ex-dividend. They're going to pay me that dividend for on 3.5. So those extra 100 shares, yeah, I'll get another $160 out of those 100 shares that I sold because it executed on 2/17, and I've got 300 and some shares. Yeah, I'll probably get a $500 dividend check from UPS for holding these shares at on March 5th, which would be Thursday, Friday. So I'm okay with that. And then I'm going to take that and probably buy some more of it. I might buy some back, right? Like I said, at a discount to where I just sold it at 115. So I'll set a limit order. I'll be ready to buy it, right? So Zscaler, I did want to give a little bit of update as to why I got this. And I told you guys that I'm looking for cybersecurity at a discount. If we're looking at this thing, yeah, you can see it. I'm down a little bit, not crazy. I just started this position and it's 9 shares. We've got around 59% of upside. We did get some price cuts this week. Not crazy. We still have some higher price points, right? We got 40 points higher. This is about a double from where we are. This was actually listed on Friday, right? So at 280, we got a 200, a 2.25. And I think there's a lot of reasons to be adding some of these tech names on this weakness, right? Even on the low end on the street, we got 23% of upside. So if I compare that to what Apple's doing versus, 59% of upside on the average on Zscaler, plus I needed some cybersecurity. I don't really think Apple has as much room to grow. So yes, they've got around 16% here, but the low end's a negative 9%. So do I want to just compare analyst price points? No, I don't. I don't necessarily buy into this because I see them trade or exchange their thoughts, their theories, their prices at a given notice, right? We had a couple bad days for Zscaler and they lowered that price target. We have a couple bad days in the market overall. We're going to lower Nvidia's price point because of market conditions. So there's a lot of different things here. But when I'm looking at something like a ZS, what do we see, right? Let's take a look and try to compare what I sold out of. And I didn't just simply go right out of Apple and go straight into Zscaler dollar for dollar. I didn't, right? I showed you guys I bought Salesforce. All right, let's take a look here on ZS. My apologies. We will get this right someday in time. I'm not too sure when. We are looking at a stock that has a forward PE that's higher, right? So, but where does this stock historically trade versus something that's a little bit more, well, a lot more established like Apple, right? So we've got a stock that's got 3 upgrades in the last 120 days. We got 75% of upside here from 44 analysts. Now that might be a little bit older. We've got earnings per share making a steady climb, right? From 3.25 up to 381 up to 450, right? For 2027. So that's a pretty significant raise over the next 2 years. Positive earnings the last 6 quarters. We've got annual revenue going up 23% and 47% versus Apple's 11 and 19. So revenue is growing a lot quicker. Earnings are growing nice. And it is trading cheaper. So there's a lot of things here that I like. One of the main things, though, was the fact that I could get into a cybersecurity company at a discount, right? So yes, it's trading at a 42, but the 5-year average is an 81. That is a 47% discount. Earnings are going up, prices going down. I see this as buying quality at a discount, right? Yes, price to sales is high at an 8.7, but it is at the cheapest price point that we see on this 5-year chart. The 5-year being a 16.5. This is at such a discount. Their forward peg is also 2.5, but it is under their 5-year average of a 3.5 versus Apple being a 2.5 and their 5-year average being a 2.6. So some of their prices look cheaper. The conditions for Zscaler are deteriorating because of people selling off the tech sector, but they still keep Apple because they know it as a quality name. So for me, I wanted to diversify a little bit away from Apple. I don't think that they have the AI story going for them at this point that some of the other big players do. I wanted to rotate some more into Salesforce at this discount. Again, I think that Salesforce makes a lot of sense. We're going to pull that one up real quick. And then I'm going to look at what stocks are on the list for this year. We're going to share CRM. I won't let you down this time. I know I just did it, but yeah, we're at 194 year to date. We did get down to 184, which this is a little bit deceiving. This almost looks like 184 is higher than 187. That's just the way this chart's laid out, though. So yes, it's at a discount. PE on a trailing 12 months is at a 25. They are in the Dow. They've got some different things going for them. We've got, again, yes, I'm down on this one. I'm aware, guys. I'm aware, but this is why I'm buying it, is because it is down and I believe in it long term. So it's a quality company at a discount that I believe has a lot more room to run up than maybe what an Apple does at this point. So it is firmly in a buy rating. We have had some problems with management. I think we're clearing up a lot of that. One upgrade, about 40% of upside from the analysts. We've got annual revenue that's creeping up really nicely for 28. 26 looks fairly flat. But yeah, we're going to turn this thing around. We don't have all the guidance there. We've got AI, they're leaning into it heavily. Dividend payout ratio at a 21. I'm comfortable with that. Anything under a 60 on something like this is comfortable. Under 80 on some other stocks is okay, depending on the type of company that it is. If it's consumer packaged goods, I'm okay with it being a little bit higher. Tech, I'd like them to keep a little bit more cash on the sidelines to do what they need to do in order to grow. And then you got REITs that are going to be, sometimes up to about 100%. All that money is getting repaid to shareholders in the way of dividends. Then we've got coming down here, we're at a 55% discount on forward PE. It's at a 15. So that's probably one of the cheaper stocks in the Dow, in the S&P, and I am comfortable adding to it here, right? So I like these numbers, significant discounts on those metrics. Price to sales at a 4.4. Again, one of the lowest since 2022, right? So if we look at this, and then we're seeing, it got up to a 9, and then it kind of came back down. I'd much rather be buying it at that discounted rate rather than at a premium, right? So this is one of the lowest prices we've seen on a price to sales metric for Salesforce. I'm comfortable buying there. Trailing P at a 26 versus a 73.5. Man, that's a steal. Forward PE 15.8 versus a 35.1. That's a steal. 1.1 on a forward peg. Not quite where Nvidia is, but I don't want to just keep piling all my money into Nvidia and AMD. So I'm trying to rotate into some other areas. And that's a steal, right? So all these metrics look a lot healthier to me, and I'm comfortable adding into this weakness. I don't think that this weakness is going to stay around forever. So for a lot of those reasons, I'm trying to diversify simply just away from Apple. Yes, I bought some more Amazon. I still think they're a better buy than Apple right now. I bought some Broadcom for, a lot of different reasons. But I don't know that I just simply want to set it and forget it and have Apple and hold it forever when I think there's better buys out there. So it really gets to be, where do you want to deploy your money? What's the best bet for you here and now? Their trailing 12 months is a 67. It's probably a lot cheaper. And some of their numbers are probably a little bit skewed because they are in the spotlight with semiconductors right now. They maybe weren't as much in years past. Micron's gone absolutely crazy. Even Micron, I'm sure if I pull this thing up, oh, sorry guys, I did it again. Micron at a 39.5 trailing 12 months is probably insane for their trailing 12 months PE. And I'm sure a lot of their numbers going forward are insane also, right? But if we look at this thing, it was at $72 and it went stratospheric, right? It went up to 437, 455, and now we're sitting at 412. Does that mean I want to sell it? No, that means I probably need to keep a really, really close eye on Micron and know just where I want to be and what I want to do with this thing. I mean, again, you can see my gains. I'm not trying to hide it. Up significantly there, but what do we do, right? So I put in 13.9 and we're up to 48. So this thing has done well for us. And this is probably only from last year. And I did have a covered call that sold these probably in the upper twos. Could probably relive that decision, but it is what it is, right? I put that into other things that are doing well also. And like I said, I'm still outperforming the Nasdaq, the S&P, and the Dow. So I'm okay, right? I'm okay. I made a decision and you live with that decision. That's what we do. So yeah, that is something I did, and I made money on those, and we deployed that money elsewhere. Is it a buy now? I'd have to do a lot more digging. Probably not. I don't know that I want to chase this trade at this point in time, right? So that's why I might nibble sometimes. I probably bought more AMD or Nvidia than I've even considered buying in Micron. I still think that I don't have enough in AMD, and I don't know. I probably need to have more in AMD, and it's probably one of my largest positions. Sitting at 200 price points, 42% upside. I need to buy more AMD. And it's not, oh, it is on the list right now. And at the beginning of the year is 227. Do we buy AMD? That's a tough one. Nike, SoFi, Salesforce, Adobe, AMD, Nvidia, Microsoft, Amazon, Celsius, GE Vernova, Netflix. Oh, I didn't cover Netflix news. Let's cover Netflix real quick. We were looking at it at 91.04 beginning of the year. It went up crazy on Friday because this deal might fall apart. But man, let me get this news right before I botch this one. Do not want to mess it up. Let's take a look. Sorry, guys. I promise I'm going to try to get this one quick. And here we go. Netflix, right? They are about to get $2.8 billion, right? For not doing anything, for not buying anything, for not making any moves. This would be if they don't get the deal, right? Netflix said they will not raise their bid to acquire Warner Brothers assets to match a new revised bid by Paramount Skydance. Paramount has agreed to pay the $2.8 billion breakup fee that WBD or Warner Brothers Discovery would owe Netflix if that deal didn't go through. So Paramount would just be saying, hey, Netflix, here's $2.8 billion. We don't want you in the deal. And okay, well, that's why this thing went up crazy on Friday, right? So we were buying this thing at 91. It went down, and someone's probably saying, yeah, I knew that wasn't going to work, you lunatic. Why would I buy Netflix at 91? It's going to go down. Buy it in the 70s. Well, yeah, it did go down to the 70s, and I was probably buying more there. And then we just got this news that, hey, if the deal does fall apart, they're getting paid regardless. So it goes back up. And again, you don't want to crowd this trade. You want to average in over time. So the more that you average in, I bought some at 90, I bought some at 75, and now it's at 96, and we're sitting pretty, right? So I'm okay with dollar cost averaging because it works. And it's as simple as that. If you just keep picking good stocks that are high quality companies that do good work, and you keep adding to them over time, I think you're going to be safe, right? And not putting it all into one basket. I wouldn't recommend that. I've said that, and I've said it before. I've been saying it for 4 years. Don't put it all into one basket. Buying Netflix could potentially work out. I've talked about this one ad nauseum. I don't need to keep repeating myself. They got around 18% of upside. I'd rather buy Netflix than Apple right now, which is probably crazy. But I think they have more upside. So yeah, and then Bitcoin, right? We were looking at Bitcoin at 93,750 to start the year. I think we hit 70,000 on Saturday after the Iran-US conflict. I want to buy some Bitcoin, but I'm not doing that here. I'm waiting for some of my payments to come in, and then I will be buying some more Bitcoin. Nike doesn't really necessarily excite me all that much. I do like the position. I think long-term, you're probably safe. You got around 22% of upside. Nvidia, what do we got there? We've got 54% of upside. AMD, we just looked at this. We've got 42% of upside. Microsoft, that was down 17% to start the year like 2 weeks ago. Well, they're down a little bit more. They got 51% of upside. Amazon, gotta love some Amazon. They're making their own AI chips like that. Love the company. They've kind of not really been getting a lot of the respect that they deserve, right? 210, we're looking at an average price target of 282. And I said I don't really look at simply just the price point, although that's what we're doing right now. I know, it doesn't make sense. Celsius, around 30% of upside. They've been doing really, really well. I do like that position. They aren't tied to AI. They aren't getting shut down from, international geopolitical problems. That has a lot of safety right now. If you look at what Monster or Red Bull's done, man, those are some of the biggest growing stocks in the market. I mean, that does make sense too. SoFi is undervalued right now, 1776, 46% of upside there. So many of these names make sense. GE Vernova, negative. I don't really want to touch that. I sometimes just use this to get a general consensus as to what the market thinks about these, whether we have upside, whether they've sold off too much, or sometimes you've got to dive in a little bit more and see why that price is where it is. Has the price just run up or come down? Did they have a bad earnings like Nvidia didn't, but their price still came down? Does that mean that some of the price targets just went up and the stock price went down? Possibly. That's why we have around a 54% of upside. Adobe, I'm just going to cover these real quick because we're here. Adobe, 60%. Ooh, that's enticing, but a little bit more worrisome with the way that software has been trading off. CRM at 41%. I would think that the sweet spot here would probably be a mixture of Nvidia, AMD, Microsoft, and Amazon. If you want a little bit more risk, I'd probably lean into Adobe, Salesforce, SoFi. Netflix, they had some big news. I might let that one come back down for the next couple days to see what happens with this deal. So I'd probably not buy that. We played a little bit safer on Microsoft. That was at 473 to start the year. And now we're sitting at, what did I say? 392. That's come down quite significantly. I like those names that are probably the sweet spot. Part of me says go a little bit riskier and lean into Adobe for the standpoint that software is probably really, really oversold. The low price point, though, doesn't give us much room on that low side, right? So compared to an Nvidia that low side has 24% of upside, where do you want to be, right? I mean, I'd rather have worst case scenario go up 24% rather than 2%. Nvidia had earnings, have that news. You know what? I'm buying Nvidia. I'm going to buy Nvidia on Monday for the investing challenge. I'm spending $200 of my own money every week here. I put that into the Facebook group. I talk about what stock we're buying, why we're buying it, and the names that I've got on the portfolio or on the watch list for the year. I just ran through the 12 or 13 names that is on that watch list for the given year, and I try to change it, and I try to see which one makes the most amount of sense to dollar cost average into at that given point in time. Well, we've got the news from Nvidia. We know that they sold off, but things look strong. Yes, Amazon's doing their thing. Yes, AMD is doing theirs, and Meta's, going to AMD. Yes, I said that AMD is probably the one that I need to add more to. I probably should add more to both. So I'm comfortable buying Nvidia. I like the name. I like the position. I like the fact that it's traded down when I don't think it should have. So that's what I'm doing. Please feel free to like, subscribe, and share. I love the support. And appreciate you guys being here. Appreciate you listening to me click the wrong slides for the past hour or however long we've been on here. And I definitely appreciate the sharing and letting, some other like-minded investors join into the conversation. Go over to the Facebook page, links in the description for all the things that I do, whether it be webullcrypto.com, E-Trade, or even Binance, right? And I got some other links there too. Check them out. Do what you're going to do. And I'll catch you guys in the next one. Take care. Thank you.